Hey, what's going on, guys? Welcome back to the channel. This is MF Dividend Stocks. I'm your host, Joe. Let's get into this. Alright, we got a great video for you guys today. But first, we're at 23 subscribers. This is amazing. Thank you guys so much. It's only been like 22 days. So we're getting like one subscriber a day. So if you're new here, please subscribe. Keep it going. I need the help. If you do enjoy the content I do, please like the video. It helps the video get out to more people, telling YouTube that, hey, this guy doesn't do bad videos. Let's try to show it to some more people. So the likes, the shares, the subscriptions, all that stuff's helping like crazy, and he's doing really good for like under a month that I'm doing this. So I really appreciate you guys. Thank you guys so much. Next thing is Twitter. I only got 2 followers. I figured I could show you some stuff, show up my videos so it's easy for you to see, talk about stocks, give some, not really tips, like not advice, but some things that I'm doing. Keep up to date with me. You guys can send me some stuff, ask me some questions, you can DM me. We'll go from there. I'm also sending out cool stuff like Robinhood. If you don't have a free stock, you can get a free stock with Robinhood. If you're interested in that, follow me on Twitter, or just look at the link in the description below. Get your free stock. Alright, this article talks about 2 companies and tells you a little about the crisis. Between Russia and Saudi Arabia, they've been fighting back and forth for oil. Yes, produce more. They're in a big oil war for the last 2 months or so. And on top of it, the pandemic hit. So now everybody has this excess of oil. Well, those countries have excess of oil and they have nobody to give it to. People are turning away. China turned away because they just have too much right now because no one's really moving around. There's supposed to be one coming to the U.S. soon, and they really don't need it. They did have a deal with Trump saying on May 1st they would reduce the production of oil, but we still got some time for that. So right now we're in a negative. It's like negative 3% about. So they're actually paying people to take the oil. Now get this, the reason why they're paying people to take the oil is because they can't store it. It's going to cost them too much money to store it. They have nowhere to put it. So they're actually sending these ships out, trying to dump the oil somewhere over this oil war. And on top of it, the pandemic hit, and now everybody's kind of screwed in the oil industry right now. But where there's a mess up, there's always opportunity. Now these 2 companies are doing a pretty good job keeping their books right and doing what they have to do for the short term. Chevron's the first one we'll talk about today. Let's go over them real quick. Alright, they're trading for about $80 a stock. They were up around 120. They got a fair value of 111. So there's about 30 something or so, it's about 20 something percent you can get back on your money, and they pay a dividend. If they haven't cut it, I know the other company I'm going to talk about, they actually cut their dividends, but we're looking for maybe a year or so, quick turnaround, get some money. If they do bring the dividends back, it might be a long-term hold, or it might be something that you just want to get your $20, $30 more when it goes back up, and then you can sell it for something else. So dividend on here is 5.92. These are highly risky stocks right now. Anything can happen. Please, this is just information and for entertainment purposes. Make your own decisions when thinking about these things. Okay? The PE ratio is not too bad. Market cap's good. You want to see this company grow and come back. This is one of the better companies there. Better companies in the industry. Everybody's buying it right now. Everybody's looking at it. Fair value is 111. The moat is narrow. Like, at least they have some kind of moat. The uncertainty is definitely high, but they got really good stewardship. So I think this one's going to be good. I'm gonna go into it as soon as I get some extra cash on me. All right. So Chevron. Then we got. I'm keep hacking this name up for the other one. All right. Schlumberger. If I'm saying that right. Schlumberger. Ticker sign SLB. The largest oil service company in the world. The company is suffering, obviously, because it's just like they all are. So they decided to cut their dividends on Friday to have more cash to meet the near-term debt obligations. So they take care of the debt. I don't like that they cut the dividends, but hopefully the dividends come back. Cut's kind of a strong word. Hopefully it's more like a suspend. Definitely look into it. Do your research, but this could be another one that you can just put some money into it, and then as it builds up, you can go. Let me show you on Robinhood here. It's $14 right now. The market's about to open. It's about to open in like half hour or something. Where we at? Okay, market cap 21 billion. The dividend's 13.9. That's cut right now, so you're not going to get a dividend. The buy is 68%. People are buying it like crazy. It might go down again. People might sell off because of this news, but to me, not financial advice again. I'm going to try to get in there and get some, and hopefully this works out. All right, so 55 is a fair value for it. It's at 14, so even if it goes up to like, say here is like 28 or something like that, you're going to make some money off it probably. They should be strong enough to come back. You also got like, Trump didn't let the banks fail. Well, not him. They didn't let the banks fail. They didn't let the mortgage companies fail. They didn't let, they're always bailing everybody out, like the cars. So they're gonna bail out the big oil companies too. Chevron, Schlumberger, if I'm saying that right. They're gonna keep them around. So you would think it should be a safe bet, but again, please make your own decision because I don't want to lose any of your money. All right, they got really good stewardship. Uncertainty is high, of course, and a narrow moat. You know, there's only so many moats you can do, but this one got to be a narrow moat, which is not the best, but at least it's a moat. It could be zero, and it would be even worse. All right, so now with these two, the overall consensus, I think between Chevron and Schlumberger, they're both kind of good. Like, I don't know. It's a hard decision to make. Tell me below in the comments which ones would you go for. Do you like either one if you can only pick one? Or would you go with something like, even go lower, like say an Exxon or a Shell, like something like that, even bring it down to that level. But I think this is a pretty good start. And I always like to go with the cheaper stock because I can buy more of it. You guys tell me below in the comments. Thank you so much for watching. Don't forget to leave a like in the video, share it with your friends, tell your boys, and don't forget, subscribe. Later. Yeah.